Hey guys, Outhenticfx here. Today's lesson will be on entry type continuations and spotting how to trade off higher time frame demand and supply zones, guys. So the red supply zone is your H1 and the gray supply zone at the low is your H1 demand zone, right? On the higher time frame. So the two types of continuation or entry type continuations structures that I like using is the single break of structure, double break of structure, right? This is normally found on your lower time frame. So what happens is you'll find your point of interest on the 1 hour, 4 hour, or even daily, right? And then once that point of interest has been identified, you will then find price channeling into that demand or supply zone. And then we then move down to the lower time frame, such as the 15, 5, 3 minute, 1 minute, even 30 seconds, guys. And then from there, look for our entry so that we can get the best possible entry within that area. So to get into this example, we see prices creating lower lows, lower highs, lower lows, lower highs, lower lows, right? Once we create this lower low here, we then see price channeling into our demand zone, guys. We see price channeling into our demand zone, reacting to an order block of this demand zone, right? Or institutional candle. We then have a minor consolidation before price fully mitigates the order block within the higher time frame demand zone. Once that occurs, we have a large expansion or impulsive move, bullish impulsive move of this bullish order block, right? So that breaks structure to the left. That's a single break of structure, right? From there, we then see price channeling back down into that demand zone that was created on this expansion, guys, creating a second break of structure to the left, right? So now we've created a new high. Once that happens, we'll see price return back to the original expansion or demand zone within this lower time frame, right? So all that's happening here is a shift of structure preparing us to go bullish, right? So we'll usually find this on the lower time frame, such as the 1 minute, 2 minute, 3 minute, or whatever, 5 minute, 15 minute. Once price enters our higher time frame demand zone, we trade into that supply, and then supply will be broken on the second or third break of structure, guys, creating that bullish push to the upside. So usually when we're trading on the higher time frames, such as the daily H4 and 1 hour, we can't just place buy and sell positions once price reaches our supply and demand zones without any confirmation, guys. So that's why we need to always go down to the lower time frame and look for that entry type continuation. So what I'm about to show you right now, we're on the 1 minute time frame on AUD USD, right? I'm showing you how price is channeling into a 1 hour demand zone and mitigating a order block on that inside that 1 hour demand zone, right? So usually on the 1 minute time frame, price will move a lot quicker, guys. So it's always important to stay on the chart when price is near your point of interest, right? So you'll see that, okay, cool. Price will create higher highs, equal highs and equal lows at certain points, right? So here we have equal lows, equal highs. We have price creating that lower high, lower low, lower low, lower high, and then from there price channels into our 1 hour demand zone, right? So here we can see that at least 80% of this zone was mitigated, right? So once we have that first break of structure to the left, breaking structure creating a high, we then will see price channeling back into our demand zone to fully mitigate our 1 hour order block, guys. So this will be our 1 hour order block being mitigated fully to the pip, which is 100% mitigation, guys. Once that happens, we already have confirmation number one. So we can enter on this first break of structure, which is here, and then catch this move to the upside, right? So then from there, once that occurs, we then now look for our second order block, which is within this area over here, which is in this area over here. I'm going to mark it off as blue. We have to wait for price to return back into this order block. Obviously, at this point, price broke supply over the highs here and then started creating bullish momentum. So if this order block or demand zone is not being mitigated at all, that means we just need to continue with the trend. So, okay, cool. What do we see then? We see this high being broken to the left here, right? BOS top. That's where now we mark off our bullish consolidation block before the expansion, which is over here. And there we go. We have our second entry over here. And then we can ride price all the way to the upside into a higher time frame supply zone. So don't stick to the 1 minute the whole time, guys. You need to switch time frames. Right now, I can't really do that because it's gonna shift in terms of the chart is gonna shift. So anyway, to get into it, we then see price channeling all the way up, guys, clearing the liquidity that was built on the left side, guys. So you can see liquidity has been swept from this level due to this expansion. Price will always look for liquidity to sweep, guys. That's the way this strategy works with supply and demand. So it's very simple, guys. If price does not activate this first expansion or break of structure here, which is our second entry, we carry on and look for that second break of structure to the left of the previous higher high or higher low. So now this becomes our higher high, this becomes our higher low over here. Higher low. Oops, too big. Bam. This becomes our higher low, and then what happens then? We do have a newfound higher high. This is the best way, guys, to trade supply and demand zones, especially on the lower time frame. You'll find supply and demand zones on any time frame, but usually when we want to enter based off the larger time frames, we need to wait for price to enter into our demand zone, break structure, give us that new high, pull back, give us that low, then expand, giving us that new higher high, higher low, and then we wait for that second break of structure or third break of structure to re-enter price and catch these perps, guys. You can see here we made a percentage of 34%. Here we made a percentage of 33%, guys. So to get back to it, very simple understanding the way price moves. I will re-explain it quickly. When trading on a higher time frame, such as the daily, 4-hour, or hourly, we cannot just place our buy or sell positions once price reaches our supply or demand zones without waiting for any confirmations on the lower time frame. Right? Once we find our point of interest, we go down onto the lower time frame, such as the 1 minute, 3 minute, 5 minute, or even the 15 minute, to see how price is being delivered into that zone and look for our entry on the lower time frame. As you can see, higher time frame demand zone, wait for price to channel in. Then this blue area is us going on to the lower time frame, such as the 1 minute, seeing price mitigating the order block within that demand zone, and then expanding, breaking structure to the left, creating a new high, coming down back into the newfound demand zone on the lower time frame, mitigating it fully, expanding, breaking structure. Once we have that second break of structure, we then have price channeling back to create the new expansion, guys. So it's all up to you what time frame you want to use and how you want to see things, but we always trade into our supply zones on the higher time frame. So keep in mind, if you're not successful at spotting single breaks of structures, which is the entry type 1, you can then wait for entry type 2, which is double breaks of structures, guys. As I showed you over here at the top, we have a single break of structure. Price came in, we got in for a buy. If you weren't able to spot this buy, you wait for the second break of structure, which breaks the high, which is here. You wait for price to come back into this bullish consolidation block demand zone, mitigate price. You see this area wasn't fully mitigated, but at the end of the day, it did tap into the high of this bearish candle over here. That's now when we enter for longs, catching these perps, guys. So that's the lesson for today. I hope you understand. Watch the video again if you don't understand. Go to your charts, backtest, and see if you can see these entry types based on higher time frame confirmations. At the end of the course, I will be showing you a detailed outline, step by step, of how I trade everything, compiling the whole lessons and course together, guys. So stay tuned for that. Hope you enjoyed this course. See you in the next lesson.